When a person with money meets a person with experience, the one with experience ends up with the money, and the one with money leaves with experience. Undoubtedly, one of the most respected investors ever, Warren Buffett has a simple recipe for investing success. Today, we will tell you about Warren Buffett, how to invest in stocks for beginners. Number 12. Invest in yourself first. The best investment you can make is in your own abilities. Anything you can do to develop your own abilities or business is likely to be more productive. The best investment you can make is in your own abilities. Warren Buffett says that the best investment one can make is in his or her own abilities. Most people are not going to make most of their money from the stock market. They're going to make it from their careers. So put yourself first. Buffett's partner Charlie Munger had a similar thought. Munger's secret to success: sell yourself an hour each day and use that hour to make yourself better. Investing in yourself is paramount to doing great things and applies to more than just investing. According to Paid Surveys USA, 75% of Americans invest in themselves first. Number 11. Diversification is not always a good idea. Many good investors stress the importance of diversification, but Warren Buffett tends to disagree with the idea. Buffett says that diversification is for people who don't know much about investing. An experienced investor should choose stocks on a long-term basis and should have faith in his or her investments. Some investors diversify their portfolios because they're afraid that any one stock might sink their entire portfolio, but while doing so, it becomes much harder to keep track of the current events impacting each company. So by diversifying, they might reduce the volatility of their portfolio, but at the same time they reduce their focus on individual investments. Buffett waits for opportunities to buy good stocks, and when those opportunities come his way, he takes full advantage. According to Buffett, when it's raining gold, put out the bucket, not the thimble. Number 10. Look for a margin of safety. Prioritizing a margin of safety is a cornerstone of Buffett's investment philosophy. In simple terms, a margin of safety refers to characteristics of an investment that help to protect investors from losing money. For example, if a stock trades for $10 per share, but the company's assets are realistically worth $12 per share, then there's a $2 margin of safety. The intrinsic value of the assets should prevent the company's stock price from declining too significantly. Buffett's goal is always to pay less than a company's intrinsic value. As he says, a too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business developments. Number 9. Focus on quality. Warren Buffett doesn't invest in junk. You typically won't see him buying struggling businesses, regardless of how cheap they become. One of the best Buffett quotes new investors can absorb is, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Number 8. Don't follow the crowd. Here's another piece of Buffett advice that is extremely important for beginner investors, especially in the modern age of Reddit message boards. Don't buy certain stocks just because everyone else is. But also do not aim to always be a contrarian and sell the stocks that everyone else is buying. As Buffett does, the best way to invest is to ignore the crowd entirely and focus on finding value on your own. He also says, the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Number 7. Don't fear market crashes and corrections. The obvious goal of stock investing is to buy low and sell high, but human nature can compel us to do the exact opposite. When we see all of our friends making money, that's when we feel like we should put our money in. And when the stock markets crash, it's our nature to get out before prices drop any further. Buffett loves it when stock prices drop since it creates opportunities to buy at a discount. If you were shopping at your favorite store and suddenly learned that the entire store's prices were 20% lower, would you panic and run away? Of course not. Buffett embraces discounts on his favorite stocks and says, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Number 6. Approach your investments with a long-term mindset. One of the most important Warren Buffett quotes on investing you can absorb is, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. He doesn't choose stocks just because he thinks their prices are going to rise this week, this month, or even this year. Buffett buys stocks because he wants to own those businesses for the long term. He still sells stocks frequently and for a variety of reasons, but approaches most of his investments with the mindset of owning them forever. And if you can't get into a forever mentality with your stocks, Buffett has called a set-it-and-forget-it investment like an S&P 500 index fund the best investment most people can make. Number 5. Don't be afraid to sell if the scenario changes. A famous Warren Buffett quote from when he was asked about an investment he decided to sell at a loss. The most important thing to do if you find yourself in a hole is to stop digging. While he certainly wants to own every stock he buys forever, the reality is that outlooks change. It might surprise you to learn that a couple of decades ago, Buffett bought a large position in mortgage agency Freddie Mac. A few years before the financial crisis, he noticed that the lender's management had started to take unnecessary risks with the company's capital and decided to sell. A few years later, when the financial crisis hit, it became clear that Buffett had made a smart move. Number 4. Learn the basics of value investing. Warren Buffett is widely considered to be the world's greatest value investor. Value investing prioritizes paying low prices for investments relative to their intrinsic values. A value investor's goal is essentially to buy $100 worth of a company's stock for less than $100, ideally much less. Value investors seek out and invest in companies with intrinsic values that are well above the enterprise values implied by the prices at which the company's stocks trade. Number 3. Research and reflect. Buffett regularly spends long days in his office in Omaha, Nebraska. But it often surprises investors to learn that he spends the majority of his time just sitting alone and reading, or not doing anything at all. As he has been quoted as saying, "I insist on a lot of time being spent almost every day to just sit and think." Buffett views knowledge as something that compounds over time, and he believes that much of his success can be attributed to the accumulation of as much investment knowledge as possible. Number 2. Which stocks does Warren Buffett invest in? Berkshire Hathaway's stock portfolio is worth hundreds of billions of dollars, and most of the stocks were selected by Buffett himself. While Berkshire's portfolio holds about 45 different stock positions, nearly 70% of the portfolio's value is concentrated in just 4 stocks. Here's more information about each of these top holdings. Apple. The tech giant stock is the largest holding in the Berkshire Hathaway portfolio by a wide margin. Berkshire owns 5.5% of Apple's stock, which was worth more than $150 billion as of late 2021. Buffett loves Apple not only for its sticky customers, it's tough to imagine a company with a more loyal customer base, but also for its pricing power and top-notch leadership. Bank of America. Berkshire owns 12.6% of Bank of America's stock, and it was the company's second largest stock investment next to Apple as of late 2021. Buffett is a big fan of Bank of America CEO Brian Moynihan and the rest of the bank's management team. The company's stock regularly trades for an implied valuation relative to the book value of its assets that is below that of its big bank peers. Bank of America is also an excellent dividend stock, prioritizes share buybacks, and has grown at one of the fastest rates in its peer group in recent years. Coca-Cola. Berkshire is a major investor in the beverage giant, owning 9.3%, $22 billion at the time of this writing, of the company's stock. Buffett in the late 1980s started accumulating Coca-Cola stock, which has been one of his most successful long-term investments. Number 1. Which stocks does Warren Buffett avoid? Buffett avoids investments he doesn't understand well. That's the main reason you won't find many high-growth technology companies or biotech stocks in Berkshire Hathaway's portfolio. They're not necessarily bad businesses or overvalued, but Buffett knows where his stock-picking strengths lie. One final takeaway is that just because Buffett avoids a certain sector or industry doesn't mean that you also have to. You can invest like Buffett by sticking to what you understand. Do let us know in the comments if these tips were helpful for you. Thanks for watching.